Hello.
Hello.
Good evening, ladies and gentlemen, and welcome to another episode of Techne Bytes. Today we have a very special guest, Mr. Walid Mansour from Middle East Venture Partners. This is our fourth episode, and before that we had Chris Hively from Techstars, we had Noah Riz from Facebook, and we had David Rose from New York Angels. So please, everyone, welcome Walid with me. I think Walid's on board. If you can turn on his camera. I think we lost Walid. Yep.
Oh, I'm here.
Walid,
Hi,
how are you?
everybody.
How's everything going?
Alhamdulillah, all is well. How are you? Thank you for having me tonight.
Thank you for joining us. How are things at your end? Are you in Dubai now or Lebanon?
Yes, Dubai.
Dubai. How are things in Dubai?
Good, I guess. I got used to the confinement and the lockdown, and I look forward to coming out of this.
Yeah, we all do. We all do. So, Walid, thanks for joining us. We're happy to have you, and we'd like to, start the conversation with, a little bit more about your history. You've been into investment for a long time, but before that, you were also a consultant. So, how did you get into investing, and what was the first check that you wrote? Was that individually, or when you joined MEVP? So, if you can let us know more about the story.
Sure. So thank you, first of all, Tariq, and everybody. My journey with venture capital started before MEVP, roughly 15 years ago, when I was working for the Dubai UAE government. And back then, the government had a lot of initiatives to support entrepreneurship and incubators, accelerators. So that was my first, you know, um, entry into this industry. And back then, the idea of venture capital, or in general, the idea of investing into SMEs, and specifically the S part of SMEs, was not really developed. We had a very vibrant private equity industry that was looking at larger deals and larger transactions, but nothing really was done for SMEs. So the idea and the need, actually, I saw the need back then to offer equity investments into those companies. And we had started back then in supporting accelerators and incubators, which are an important piece of educating entrepreneurs and creating entrepreneurs. So that's how it all started.
Great. So this was, I think, 10 years ago,
15 years
2010,
ago. Now it's around 2005, 2006.
2005, before MEVP,
Yeah.
Middle East Venture
No,
Partners 2010, you joined
that
them,
was
or?
before. That was before MEVP. MEVP started in 2010. So I was talking before.
Ah,
But
okay.
my background has been mostly in management consulting, strategy consulting, and engineering as well. That's even a previous life to that.
Okay, perfect. So about Middle East Venture Partners in 2010, I've seen that you've started with a fund that was maybe 10 million, and now the fund that you have is 140 million. That's the target, I think, of the fund that you have. You had fund one, two, and three. And so where are you heading? And can you tell us more about how you started with smaller checks, and then now what kind of companies you're investing in? Because I'm seeing a lot, you have a very big portfolio. You invested in Eventus and Remy, and a lot of very successful startups, let's say. So tell
Thank
us
you.
more about.
Sure. So over the past 10 years, we started with what back then it seemed big, but today it seems small. It tells you how much the industry grew. With a $10 million fund, that was predominantly a seed fund. And then we took this journey into multiple funds. And today we still cover the seed side, but most of our activity goes into Series A, Series B, etc. Excuse me. And alongside that journey, we also had the opportunity to develop a good co-investment platform where a lot of our investors and friends were able to double down on a lot of the investments we made. So all in all, I think we were able to build that asset class and build this deployment capabilities by multiple folds. We've invested in more than 40 companies over the past 10 years. We screen roughly 1,000 company every year, but we do 4 to 5 investments every year. And we've had our share of the good and the bad, the successes and the failures, like everyone else, I guess.
Yeah, yeah. So yeah, so right now the fund that this is Middle East MEVP fund number 3, I think. Aside from you have 4 funds. One of them is the Impact, but the current one is the third, is number 3,
Correct.
and it's focused on Series A onwards. You don't do any seed funding anymore, right?
No, we like to be on the A, B, and growth side.
Okay. So regarding this growth side and the startups you're seeing in the Middle East, finding deal flow or let's say nurturing deal flow that is investment ready for Series A, Series B onwards, what do you think needs to be done as a startup community or as an ecosystem together in order to have more investment ready startups in these growth stages?
Look, the most important element for company creation, startup creation, is talent, and the more the Middle East sees uh, an increase in talent, then the better we're all, the better off we're all. Um, it cannot it all goes back to talent, because money usually follows good entrepreneurs, good opportunities, and if you have good entrepreneurs, good opportunities, capital always finds itself into these companies, and the more talent you graduate, the more capital it attracts, and the more capital it attracts, the more signals for other dormant entrepreneur becomes clearer, so they venture into company build up. It's really a virtuous cycle, but it starts and it ends with talent. And I think if we had 100 times the talent that we have today, we'll have 100 times the size of the industry that we have today. It's very clear to me that it's talent, and talent is twofold. You have to have the technical ability to build something, especially in the internet and software industries, where it's not enough to be a business driven person. You have to be a builder, and you have to understand how to build things, and not build things for 1 or 2 person, but build things for the masses and scale them. And second, you have to have the ability to build large companies. So part of talent is also um, having building a company that has 5 to 10 employees or 5 to 20 employees is one thing. Building a company that has 100 or 200 or 500 employees is a different animal. So you also need the talent that take you from a small stage to a bigger stage. Uh, so in a nutshell, it's talent, it's technical talent, but it's also scale up and business development talent. And unfortunately, both are not, we could do much more on both sides in our region.
So yeah, these are very interesting insights because the way we're seeing things, a lot of founders think they can take their companies with the same teams from point A to point B to point C onwards with the same team or the same talent set. And while actually you need a different talent set and also different
Yeah.
approaches to scale the company than when you started in the initial place. So these are very important. What can we do? I mean, what do you see? Do you see more? Do you want to see more startups? Is there more money available to invest, or the other way around? What's happening in the region?
I'd like to see more talent. I think in this region we crossed the point where we have proven that there is capital to grow. But the problem is capital looks for good opportunities and returns. So for capital to flow, you need good investments, good companies, and you need exits. That's unfortunately the equation. Now we can talk about exits, but let's focus on building first before exiting, because you need to build something before you exit. And I go back to this point. We are relatively new into this experience of venture capital and startup building in the Arab world, and in the region. And the reason I'm saying is we're new is because really the acceleration has happened over the past 3 to 5 years. Before that, between when we started around 2010 to maybe 2015, it was really a lonely place, and you did not have a lot of um, both size, market size, but also quality on.
Can you hear? I lost you for a bit. Can you hear me now?
Sorry, yeah, disconnected. Can you hear me?
Yeah, I can hear you. So you're saying quality entrepreneurs, and then you cut off?
Yeah. So I was saying that between 2010 and 15, we did not see the quality entrepreneurs and quality companies in general that we wanted to see, because it was relatively easy to invest a seed amount with a company, 100,000, 200,000, half a million, $1 million. But that most of the time, the entrepreneurs and the team did not really think big or were able to execute on big plans. And that kind of did not allow them to seek for the bigger check. And there was very rarely bigger checks that were deployed back then. But then after 2015, 16, we started seeing an acceleration in the number of deals, the rounds, the ability of entrepreneurs to scale. And by scaling is basically build bigger organization that can address a bigger market and scale from country to country. So this is how I lived that journey. Now today, where do we see this moving forward? Honestly, no matter how you look at our region, venture capital and startups are a tiny proportion of its real economy, a tiny fraction of its real economy. Whether it's the amounts raised, the amounts deployed, the activity that's being generated in terms of jobs created, in terms of um, revenue impact. No matter how you look at it, it's a tiny fraction for the region. So I'm hoping that we will see another acceleration in the coming years, in the coming cycle, and I hope it will be fueled by better talent.
Okay, great. And speaking about exits and unicorns that you mentioned, now that Kareem has been bought by Uber and Su has been bought by Amazon, and we don't have any unicorns in the region anymore. When would you see a next unicorn coming? Would it be in 2020? I don't think so. Maybe. Do you think when is that going to happen? And
Yeah.
let's not put any names, but what industries?
Look, I think this whole idea of focusing on unicorns, which by definition mean billion-dollar valuation companies, is a very misleading large valuation. That should not be the end game. The end game should be that you have a viable asset class, a viable VC asset class, where investors, um, VCs, and entrepreneurs are succeeding and making money. So that's very important. So if you have an exit that is a $20 million exit or $50 million exit, and no matter how, and you have good returns on your initial investment, this is good enough, as much as the bigger exits. At the end of the day, that creates returns, that creates more conviction in the story and the asset class, that recycles the money, and I've seen it in our portfolio many times. And once once the entrepreneurs make some returns out of their companies, even though they are usually typically, maybe you haven't heard of these exits, or they were private, etc. What happens is that they go and invest in other entrepreneurs. They create a virtuous cycle. So what we need definitely is not to focus on unicorn valuations or these landmark transactions. We should focus on the overall asset class returns. I don't believe we'll see anything in 2020 given the global situation. I might be wrong. I hope I'm wrong. I hope that by Q4 we're in a better shape than we are today. Obviously, today everyone is in lockdown, and it doesn't look like there's a big M&A appetite out there. But if you follow the thesis of entrepreneurship in the MENA region, which is we can create technology companies, digital companies, they can scale to multiple countries. There is a big addressable market. They have good metrics, they can be profitable. Then we can talk about exits, either through a strategic sale, um, like what happened with Souk or Kareem, and or to talk about exits in simply private sales, so selling to a financial institution or a local institution that is venturing into a new vertical. So that's how I tend to look at this.
And it's ROI at the end of the day. So as you said, entrepreneurs really need to focus on how they're going to exit their startups. Maybe not necessarily from the day one when they have the idea, but as they develop it, they would be seeing who would be having early exits maybe, or exit at a certain point. But they need to put that into consideration when they're approaching investors, so that they can also match the investors' thesis, of course, and the returns that are needed. So it's more focusing on the exits rather than the valuations.
Yes, of course. Look, not every company should seek an exit, but definitely companies that look for VC funding should have a good exit, at least alignment. So you could build a company and it could be profitable and it could be yours for 10 years, 20 years, and you could enjoy the ride. But when you want to raise money from VCs, there has to be an expectation that there is an exit, at least for the investor,
Yeah.
that has to come up at some point.
Yeah, and these are decisions that you as a VC or any other VCs and investors need to be taking in order to say a go or a no go. So a lot of decisions need to be taken. So tell us more about some of the tough decisions that you have been through, whether they were a yes or a no, if you can share any.
Yeah. No, of course, there've been a lot of look. Again, I go back to the numbers. We screen around 1,000 company every year. We invest between 4 to 6 every year. So it tells you a lot about mostly the no's rather than the yes. And there's a reason for it. The reason is you have a thesis, you have a certain amount of bandwidth, you have definitely an experience that gives you a bias, and you're supposed to become better at it with time and with more, So, well, I mean, hopefully, you hope that you're getting better at it. But reality is, it's difficult to find the right ingredients in a company that go with your own thesis. There is the thesis on paper, a business coming and saying, I'm disrupting this industry, I'm going after a big addressable market, I am extremely, I have a path to profit. There is that aspect, but there's also the people behind it, and your ability to see whether you are able to work with these people on it, especially if you're an activist investor such as us, because we adopt a method where we sit at the boards of the companies. We look for a sizable stake in the company, so we have a voice. We don't invest in a company to own 0.5% or 1% of it and just be left out of the decision making. We are very activist in that approach because we want to help, we want to drive value. After all, our investors trust us with money because otherwise they could invest themselves directly, because we add value to the company. So the second component is and what we see beyond the numbers are the people. And people change. So sometimes you come in, and I've seen this many times. Sometimes you have a great business on paper, but the team is not ready yet. The entrepreneur is not prepared yet, or the entrepreneurs. And then we say no, and then 6 months, 1 year later, they take our feedback, they work on it, they're a better company, and they could get funded either from us or somebody else. So that kind of things happens all the time. I think there's sometimes a curse in seeing companies first, because you see the first iteration of everything first. So that's not necessarily always a good thing, because things and people change. And you hope that you get better at it with time.
Yeah, yeah. So people change, but during these times of turbulence, a lot of things also are changing. So will your investment thesis change post the Corona era?
Of course.
What do you? Everyone's seeing a lot of change, but do you, from where you stand now, do you see any opportunities that sectors maybe will be different? What will change from your point of view as MEVP?
So because we're exposed to dozens of companies, and we've been exposed to all of them, either in the past or today, we were kind of following closely this pandemic impact on multiple things. We followed, first of all, the impact on the M&A activity, so that's a clear one. Then the impact on the supply chains and customer demand. And this is where it becomes tricky, because definitely we are seeing a demand dislocation and a supply chain disruption. Demand dislocation is leading towards different behavior, price points across verticals, and some of this info is a bit unclear or misleading. In certain instances, there is demand evaporation. In other instances, we get to see and test what if a segment that we believed was resilient is really resilient or not. We saw instances of the demands. And so let's take an example. Let's take e-commerce as just an obvious one. When you look at changes in basket sizes and basket composition, when you look at whether last mile capabilities are preserved, whether supply chain have interrupted, you got to see are you if we're going to hit a recession, are we going to be able to sustain the same basket sizes and commission structure? Then if yes, then what does that mean for your supply chain? Because definitely there is a disruption there. If no, what does that mean for your business overall? Because at the end of the day, all of your plans of profitability, etc., are kind of put on hold. So that's an obvious one. I think another important insight beyond demand and supply changes is I was talking about this with a dear friend recently, is that contrary to 2008, which is the closest crisis that we have to today, so we can't really compare to older crises, just the world was way too different back then. The fundamental difference between 2008 2020 from a technology perspective has been the availability of and readiness of the cloud infrastructures. Thank God that we have the cloud, because have we not had the cloud, we wouldn't be even able to have a discussion tonight. So cloud infrastructure has enabled and allowed us to see a lot of things, and that pandemic lockdown has kind of compressed what we thought could happen in the next 5 years into 1 month, right? So we have now businesses and governments and all that want to migrate to the cloud. So in a sense, in a sense that opens up a whole door of opportunities, of new customers, of new ways of doing things, and the infrastructure is ready for it. There are no excuse for massive migrations from offline to online. So there's this need. We need to invest in infrastructure, in enabling companies. Do we need to digitize operations? Do we need to double down on fintech? Probably all of the above or some of the above, but we're actually now doing a deep dive into what we think will work and what not work, and kind of taking this 40,000 feet narrative into something a bit more granular. And we like what we see. We're excited about those new opportunities and new ideas coming up. But definitely, I think the last 10 years of focus on digitization that has been very closely linked to either e-commerce or basic delivery infrastructure, basic delivery services, etc. For me, that game is gone. That game is done. Now we need to go into new things.
Great. So I see a lot of questions open, and I don't want to miss out on as much as we can answer them. So guys, you have anyone attending on Zoom? I know that people on the other channels cannot ask. If you guys want to ask any question, you need to go on Zoom. But for the questions that are open in Zoom, please post any questions in the Q&A for the chat. I just want to know how many different countries do we have? Can you type in where you're logging in from? Is anyone logged in from outside of the region, from the Middle East? Which cities are you logged in from in the chat? So we have Dubai here, Mike in London. Hi, Mike. And from Lebanon, Corinne. Hi, Corinne. How are you? Egypt. Okay, from Italy. Positive vibes to you guys from Italy and Dubai again, Lebanon, Bosnia. All right, great. So let's pick up on some of the questions. So we have the first question from Kenza Sadiki. She says, hello, Walid. My name is Kenza for Recode. I have two questions. How do you find a startup that you are interested in? How startup can get in touch with? My second question, on what stage do you start investing and incubating a company? So it's not an incubator, but it's asking about the stage. Yeah.
So quickly, I saw that question. You can reach out, obviously, cold call or reach out on LinkedIn. Make sure that you say that, what is it that you're looking for? Is it a raise, etc.? So our doors are all open. Any one of our team is on LinkedIn, so you can easily find us there. Be very clear with the ask. We like to see companies that are already post-revenue, but we're open for all type of investment. We just will not entertain companies that are on the idea stage. We like to see at least a product out there. So if it's just an idea, we will not honestly have time to look at ideas.
Great. And we have another question from an anonymous attendee. His question is, what can a non-entrepreneur bring to accelerators and incubators in terms of mentoring? Is it possible to become an advisor without being a serial entrepreneur nor serial investor?
I'm not sure I understood the question, but look, I mean, you have to start somewhere. Chances are, if you are a serial entrepreneur, you know what mistakes to avoid. I mean, you would hope that you know. Experience is very important, but that doesn't mean that you cannot team up. Look, there's something very important when we talk about entrepreneurs. At least in our definition, we just don't necessarily talk about it companies of one. We talk about we talk about a team, right? So if you find yourself alone in that journey, go find your best your best self, who is good in engineering or who is good in product or who's good in technology. Find your crew, right? So that's very important. There's this statistic on companies that are founded in Silicon Valley that says that on average founding teams of founded companies usually are between 4 to 6 people, right? So in our part of the world, it tends to be 1 or 2, but at least try to find your founding team so that you're not alone in the journey.
Yeah, but I think it's talking. The question also was addressing mentorship. Well, I think not being an serial entrepreneur nor a serial investor, if you have any experience from a corporate background, you can still be a mentor to the startups that you are mentoring, as long as there's something to put on the table. I think that's the other part of the question. So moving on, right?
Mentorship is extremely important. To your point, Tariq, it doesn't have to be VC mentorship. I think you can't really pull this off on your own, right? Whoever tells you that or has done that is either lucky or honestly lying. This is almost of it's very hard to start a company, to bootstrap. It's very hard to scale. That's not a journey that you can succeed on your own. So whether you have mentors, advisors, co-founders, teams, it's a collective journey, and the more the merrier.
Yeah. Thanks, Walid. So there's another question from Malden Knezovic. And what would you recommend to a young startup founder if they think that their product will be successful globally without a startup accelerator? What are the main advantages of an accelerator for entrepreneurs? In the similar doubt, is there similar doubt as I am? There's a doubt. I mean, value of accelerators for that.
I haven't looked at the data, and I'm not sure whether there's a data of companies that do well because they got into an accelerator or didn't. So for me, I haven't really thought about it. I think accelerators are important, and not every accelerator is relevant to you always. Some teams find themselves comfortable in an accelerator because it helps them build the larger team, build the crew. Some of them find it interesting because they have the right mix of mentors and support. Some of them go there just to be surrounded with other startup companies, like-minded people. Again, not to feel lonely in that journey. So there's a lot of reasons, and I'm not sure you can pinpoint. But definitely what I can say is that if you have to choose an accelerator, then try to choose wisely.
Great. And Mohammed is asking, how do you think fintechs should adapt and situate themselves during the crisis? Also, what are your general thoughts about BNPL/lend check startups, and how will this industry be affected due to the newness into the region?
Sorry, I missed the question. What segment? I got the fintech part, but what lending?
Lend tech startups. How this
Lending.
industry?
Oh, look, I mean, obviously you need fintechs to operate a digital economy, so that's a no-brainer. But the issue with fintech is that some segments tend to be one player take all, and many fintechs need to get into an insane scale before they can monetize properly. It's just the nature of the commission structure, etc. And those plays are a bit difficult if you're going on the consumer side, and lending is part of that consumer value proposition. So it's addressable market and margins. Definitely, the space is the right space to be, but does it have the right economics? What I worry about with regards to consumer is, what country are you in? What country are you starting with? And what is the consumer landscape going to look like post-crisis, right? Because if you're starting in Egypt, that landscape for a consumer is going to be very different than the UAE, for obvious reasons. But also, we still don't know a lot of things with regards to the depth of the recession or that kind of amount. Now, that could be a blessing in disguise, or that could be a curse. I don't know. Does that mean that people would need more lending, or businesses would need more lending at favorable terms? Yes. are you able as a fintech to provide it to the masses? It depends on how you execute and what problems you solve. Um, Generally speaking, globally, cost of interest is going to be down, but that doesn't mean that the cost of debt will be at an interesting level, because historically, banks have been very poor at lending SMEs, for instance, but very good at lending larger or more bankable clients. Again, here that could be an opportunity. Uh, I guess it really depends on what you're building.
Okay, brilliant. And there's another question from Ahmed. What is the current and expected role of AI in the new investments? I think in your investments, he means.
I tend to look at AI as more of a capability than a
Product.
business on its own. Yes, correct. You have all of these big platforms that give you all of the AI components that you need, from the back ends to the data lakes to the machine learning capabilities to the and there's a lot of that infrastructure, AI infrastructure, that is being provided almost as a utility. There are specialized companies, and we've invested in some as well that specialize in certain um, capabilities. For instance, natural language processing, or some building blocks that are very important for AI for machine learning capabilities and artificial intelligence. Now, what I think is going to change, first of all, I think more and more you will see companies that are doing AI this and AI that, and everyone is going to be AI. But is it going really to be something that is meaningful and impactful? I don't know. I don't think you can apply meaningful AI to everything out there. I think a lot of the stuff that we need to go through in this part of the world have to go around operations, digitization of operations, etc. But applying some machine learning is almost an obvious thing to do. Are we going to have? Do we have the talent base to develop complex AI? I don't think we even have the data depth to apply that, but let alone the talent base. Definitely, it's going to be a theme of the decade to come. It's a capability. Um, a lot of tools are out there. It's almost going to be provided as a utility capability, but you'll have to still solve for the business problem and the data problem.
Brilliant. And we have Madison Marks asking two questions. Do you anticipate your investment scope to expand or narrow as we prepare for a new normal, with certain industries thriving and others that will be forced to pivot or digitalize to survive post-COVID? That's the first question. And the second
Look,
question is, okay, let's take the second after the first one. Yeah.
sure. Look, I've lived these cycles in the past. It's not the first time that we live cycles in tech. I remember when I started 10 years ago, our first investments were really around certain verticals that don't take VC investing anymore today. Let's say back then it wasn't even a mobile world, it was also a web world. So this whole idea of bringing Arabic content online and websites and blogs, and there was a lot of interest and hype in that. And then that kind of played its course. We moved on into e-commerce, and then we moved on into marketplaces, and then we started to see mobility, and then we started to see on-demand businesses. Bring me a plumber, bring me a maid, bring me somebody. And then we started to see more on fintech and cloud in general, and then we started to see enterprise. So there are flavors, and definitely after this crisis, the flavor is going to change. I don't think if you're starting an e-commerce company today, that's going to be an interesting VC play. It might be an interesting play for somebody else, but I don't see this as being definitely a VC play per se, just because the maturity of that segment is such that you're, what are you really innovating in? So I have to be really clear about that. So definitely, as for all the reasons I explained before, I think we're going to see a new type of companies coming up.
Okay, and to what extent is ESG factors, environmental, social, and governance factors, due diligence process?
Environmental, social, and government. Look, on the social side, I go back to this idea that actually bothered me 15 years ago when I started this, is that nothing has been really done for small and medium enterprises in the Arab world to speak of. There's been a lot of, support from government in the form of loans and projects, etc. But for various reasons, not a lot of it got filtered down, right, to the SMEs, and to a certain extent, it took the private sector to, get involved, and that's why the private equity and VC industry in general, by investing into those companies, have fulfilled the social mandate. The jobs that we create are real jobs. They offer mobility. They offer, for those who succeed, a social mobility that's real. Uh, we try to invest in skilled labor, etc., etc. Now, on the environmental side, I have to admit that we haven't really uh, taken that into account, simply because the nature of what we invest in are software and internet businesses, and the digitization journey of them has not been focused on things where you could have a big environmental impact. Such, we haven't invested in renewable energy, in green energy. We haven't invested in agriculture. We've been, as a company, very focused on software and internet businesses. And on the government side, look, I think the governments have done a lot over the past years, especially 5, 6 years across the region, to support and attract. And they've done it on the sides of regulation, but also support and investment. And we've been very vocal and present in some of those governmental discussions across the region. Most of the countries have been either invited to speak or give our opinion. In some instances, we supported the drafts of laws and regulations in certain countries to be able to upgrade them.
Thanks, Walid. We have a lot of questions, but we'll take
Yeah.
one more question and the last advice, because we promised you 45 minutes. It's almost an hour. So we have a question from Rami asking, are VCs reinvesting in the startups right now to save them from collapsing? Or what level of support are the VCs giving to startups in your portfolio?
I didn't understand the first leg, but
Are the VCs in the region reinvesting in their startups during the crisis to save them from collapsing during these times?
Of course. Look, that's a very good question. And this is exactly what I've been personally laser focused on for the past few weeks. When you do our review of COVID, etc., you come up with a conclusion on whether a company or a segment is going to be viable or not. And it is your duty to support companies as much as you can. But however, you cannot throw good money after bad money. That would be reckless. If you have a conviction that the company you're investing in is going to weather the storm, has the right leadership, is going to go after that, then it's your duty to try to support it, both financially and non-financially, as much as possible. So absolutely, this is a question that we're laser focused on. And thank God, when we look at our portfolio, we see that at 95% of it is really on the right side of things, because we've been heavily investing in enterprise cloud, but also in segments such as last mile enablement, e-commerce enablers, online groceries, telehealth, digital entertainment, and fintech. So we've been very lucky to be actually um, on the right side of this crisis.
Brilliant. So, Walid, before we wrap up, we'd like to get from you some advice to the startups on what to do during these times, depending on their stage, of course, and what is the advice that you're giving to all the entrepreneurs listening to you?
Look, I mean, if you've lived cycles before, you kind of have kind of an understanding of how they work. Cycles have obviously an end and a beginning, and we're seeing the end of a cycle and the beginning of a new one. My only advice is to take things the way they are. No one in a crisis or in a cycle can predict the future. No one can predict the future, right? There's a lot of literature out there and opinions and people telling you say that you have and the data that you read in your own company, and the data does not really lie. If you happen to see that the data is good, then that's great. Double down. This is the time to, this is a one in a lifetime opportunity for many to double down and be aggressive. And I've seen this in many instances, and we have entrepreneurs in our portfolio that are now going and raising money now just because their data is good and they're amazing. And this is exactly what they're doing. They're raising and they're recruiting. And on the other side, if the data is bad, then is there a chance to do something about it, right? I like to be in action mode, not in reaction mode. Is there a pivot that can be worked around? Is there a lesson learned? Is this going to be temporary because and things are going to pick up? Like, there is always a silver lining. It's never dead before it's really dead, right? So there's always an angle or a silver lining. If you keep the passion is there, then there will be hopefully there will be a way out. And if it's really, really, really dead, and that's it, that's the end of then all you have to say is, bury it and start with a new cycle. At least you have that luxury to start with a new cycle that's going to come up.
Great, Walid. Thank you very much. We really enjoyed your presence with us today. I hope you stay safe, and we hope that we can bring you with us in Techne Summit. I knew you were coming last September. Last minute, you had something that you couldn't come, but we want to have you. Hopefully, things will clear out by end of September, and we would like to welcome you. Thanks a lot.
Thank you, Tariq. Thank you very much. Good evening, everybody.
Thanks, everyone, for listening and tuning in. We have our Techne Bytes every Sunday and Tuesday. Next week is going to be at 8 p.m., not 7 p.m. We will announce the speakers that are coming with us by tomorrow for next week. If you have any questions, please shoot out to the team. I know we tried to answer all the questions, but unfortunately, the time is limited. We will have a solution for the questions that were not answered, hopefully soon. I'd like to thank all the team for supporting that, all our partners, and thank all our outreach partners for your support. Thank you. Have a good evening and stay safe, everyone.